大家好，我是艾西亚Alicia. García-Herrero is my name. I'm actually a senior research fellow at a European think tank called Bruegel, but I'm also a faculty and adjunct professor at Sun Yat-sen University in Kaohsiung, where we are now, for the program of International Banking and Finance. And I'm here today to introduce you to a topic which I hope you will find interesting, which is the global economic shifts and the new retirement strategies. The first part, I'm sure you realize, is very topical, which is the President Trump's actions, in particular the reciprocal tariffs, which have not yet been enacted, but we are all waiting, including Taiwan. So before we get into the potential impact of the tariffs, it seems important to realize that Trump 2.0, or in other words, Trump's new presidency after the first administration, it has three important objectives. The first objective is to reshape the global economic and foreign relations among countries. In other words, the US is no longer satisfied with the existing global order. Sometimes we feel that this is China or Russia also not satisfied. True, but also the US. Trump is saying, I want a different global order where the US gets more out of its money, out of its strength. And the second objective is to create new jobs in the US. The US has deindustrialized. The US is a service economy, but it's also a very unequal economy. And the reason, at least Trump's vision, is that the reason why the US is in this situation is because it's not producing what it needs. This is important for Taiwan because Taiwan is a major exporter to the US. The third issue is to give more priority to the US economy, so to basically reshore production, to not only to create jobs, as I mentioned, but also to make the US less dependent on the rest of the world, especially China. So on this note, the question is, what can happen? Because the way Trump is reacting to these three objectives, or the actions that Trump is taking, is just to impose tariffs on the rest of the world. Not only on China, that was previous administration, Trump 1.0, but in this current juncture, the problem is that Trump is imposing tariffs all over the world, or at least trying to. We're still waiting until the 9th of July to know whether the tariffs, so-called reciprocal tariffs, will still be in place. But it is quite obvious that the impact of these tariffs has been negative already, and as such, we have estimated a lower growth rate for the US, but generally for the whole world in 2025 of around 1.1% and only 1.2% in 2026. So remember, very important, the global economy will be growing less this year. Also, China will be growing less. Every country in the world we expect to be growing less. Europe will be growing little as last year, but still the same, 0.9%. So the global economy, this is important for Taiwan as an exporter, will not be as strong this year as last year. So on that note, I'm going to move to a very, very important issue for Taiwan, which is the risk of de-dollarization. I'm going to separate it into two, whether US treasuries will be sold off. Taiwan is a very large holder of US treasuries, and also whether the dollar will lose its reserve status. The issue here is that the US treasuries, which have for a long time been a safe haven, have lost a little bit of that role, at least when looking at the very rapid increase in yields, or in other words, because the US fiscal outlook keeps on worsening. And by the way, these graphs were taken before Trump announced the so-called Big Beautiful Bill, which is another massive fiscal stimulus that the US will be undertaking. So it is very clear that as long as the US continues to pile up fiscal deficit and public debt, you will see this sell-off in the market. More generally, there is an increase in the risk premium. So you can imagine the yields of US treasuries will continue to go up. Yes, gaining another maybe 30 basis points in 2025, maybe 80 on the back of a higher risk premium. And as I mentioned, this can only get worse with a Big Beautiful Bill. So tighten your seatbelts if you're holding US treasuries, which is mostly the case in Taiwan. So in this scenario, we're a Fed that needs to be cautious, although with a decelerating economy. So we are estimating 3 cuts by 2025. So the terminal rate will be at 3% for the dollar. And I should also say at 1.5% for the euro. So what this means is that the dollar should continue to depreciate globally. So is this important for Taiwanese investors? Very much so, because the Taiwanese dollar should be strong compared to the dollar, but also because they need increasingly more savings. In fact, Taiwan first has a very low retirement age, which is a very important topic, and a rapidly declining fertility rate. So you can see there the structure of the population on the left, and most importantly, how Taiwan compares with the other countries, especially in the rest of Asia. So the worst case by far in terms of the future change in the working age population is Hong Kong, because the fertility rate is really, really low. And then followed by Taiwan, then Korea. Taiwan and Korea tend generally, historically, to be very close. But Taiwan is actually worsening faster than South Korea. There's only 2 solutions. In the short run, only immigration can solve this problem. In the long run, of course, policies to increase child births, but it is not going to solve the immediate problem because it's too late. Yeah, I mean, the fall in the population has already happened. So in 18 years, the kids that are born today go to the labor market, there will be fewer, and that will affect the Taiwanese economy. The one immediate impact of this aging of the population is the fact that the Taiwanese labor market is very tight. So you have very low unemployment rate going down, even if the labor force is increasing. Labor force participation thanks to some government policies, but still the problem is that there's not enough jobs for the labor force participation. So this is the problem. It's like a structural inflation risk. The other risk, which I've already gone through, is aging and depopulation. This is a massive risk for growth, which Taiwan is also suffering. So what is the immediate consequence of all of this? Very low interest rates. That's what I want you to keep from this presentation. Interest rates will remain low for the foreseeable future. So your savings will not be easily deployed because interest rates will remain low. Now, more specifically on your retirement financial planning. This is the most important part of the presentation. Clearly, if the minimum retirement age in Taiwan is only 55, so the retirement planning needs to start at least 10 years earlier, 45. So you will need to start saving at least 10 years before your retirement age, which is 55. and save smartly. What do I mean by smartly? First, you need to protect yourself from inflation. How do you do that? Well, you can have some inflation adjusted fixed income. You have that in the US, in other countries. But if you don't have those instruments here in Taiwan, go for real estate. I know that this is a very, beloved asset for Taiwanese, but there's still a reason if inflation is there. So this is a simple deposit. As you keep the money for many years, the compound rate hits, and it becomes much more interesting. Diversification. I cannot stop really highlighting the importance of diversification for Taiwanese savings. Why? Because you are very concentrated, mostly on the US. So it is very important, of the utmost importance, that you diversify your savings. And for this you need financial professionals, obviously, and also perhaps you can also top your income with some post-retirement employment. In other words, the Taiwanese government, I think, would be advisable to keep on opening the post-retirement employment opportunities. I guess that is what I would like to say on the planning. Now, when you plan, you need to avoid too much reliance on cash holdings. I know that this is a moment where people are chasing cash. Why? Because we have the tariffs, we don't know what might happen, so there is a lot of uncertainty. But that cannot be the long-term game. The long-term game should be to invest the money as you move on to the retirement phase. So these are the three messages. Protect from inflation, beware of the US dollar, diversify. So here are my conclusions and some recommendations for investment for you based on this presentation. The first one is that volatility is king. The world is much more volatile today because of geopolitical risk. So this means households in Taiwan, investors in Taiwan, need to take into account that volatility. The second one is that inflation, because of Trump's tariffs, is here to stay. We estimate inflation to remain at 3.5%, as I mentioned before, in the US. So you need to hedge. You need to protect your savings from high inflation. Then on the stock market, I think very clearly there is too much of a build-up in the US and perhaps too little of a build-up elsewhere, whether it's Asia, whether it's China, or even Europe for that matter, although it has become more expensive only recently. So that is more or less the portfolio I would like to recommend, and I hope you had an interesting time with me, and I hope to see you in person in the future.